Maverick Traders, welcome out to your RBA rate statement. Nice to be here with you, and let's jump in to the RBA. So the expectations tonight are for a 25 basis point rate hike from 3.35 to 3.6, right? A 25 basis point increase. Now, the expectations, if you look out to the futures, for example, in the U.S., we call it Fed funds futures, which kind of tell you how the market's pricing in rate cuts or rate hikes. It's sort of modeled out as far as here's the probability of them raising and so forth. Well, if we look in Australia, they're expected to raise by 25 basis points here, and then there's expected to be one more rate hike after that, and then to kind of sit for the rest of the year around that level. Now, some data came out last week that is somewhat impactful here if we look at the inflation data. So if you go back, we trade the RBA every week, or every month, pardon me, and it comes out, first Monday usually of most months. Well, here's the CPI year over year, and notice they were expecting 8.1 and it came in at 7.4. So a much lower inflation rate than was anticipated. If you go back and look at expectations for rate hikes and rate cuts and all of those sorts of things, you can see that there was a time, let's look at this chart here. Well, let's see if we can see it. Here's the history. This will kind of show. So the history, you can see there was one time where the forecast was not correct. See how in October 3rd, there was the RBA rate statement, and it was expected to go to 2.85, and they only went up to 2.6. So they raised by 25 basis points instead of 50. Then they raised up to 2.85 the next meeting. So there was only one surprise to the markets, and that was in early October, and the inflation kind of spiked thereafter. Now, it's pretty well forecast that this meeting, they're going to raise by 25 basis points, but the next meeting and the future is somewhat uncertain, and that's probably where this trade, the fundamentals on this trade go is they're going to raise by 25. I'd be shocked if they don't raise by up to 3.6 at this meeting. The bigger question is, what are they going to do at the next meeting? Do they give any insight? What else is expected in the future? Because they're in this rate hiking cycle, but the anticipation is that it's nearing its end for this year. That they're going to raise a couple more times and then kind of sit there and see where they're at that point in time. So is a rate hike coming at this meeting? Yes. Did that inflation derail that? No, but it could have an influence if really central banks become convinced that inflation has peaked and is going to continue to trend lower. Well, that would change things, wouldn't it? And they would, then they would be less likely to keep raising rates and so on. Now, I'm not of that camp. Let me be clear. I think that central banks are going to continue to raise. Let's go into EUR.AUD. We looked at this chart on Wednesday in the midweek, and if we come into a tighter time frame, you can see right here we highlighted a cup and handle formation in EUR.AUD, and we talked about buying it right here in the pullback, and that would have been a good setup. I mean, it ran up 75 pips over the next 8 hours or so, but it failed to break out. This could have been a home run trade if the cup and handle that we discussed breaks out. So you probably made some pips, but it wasn't really, all that great. And then we kind of consolidated, fake out, downtrend, and now back to the upside. Then fast forward, and it did break out. And see how the candle kind of expanded, and then you pull back. And so this key level here has been broken. Now, we may flash down to it here in the near term. If you look at EUR.AUD, one of the reasons that we liked it was, well, it matches up where the hourly is bullish, and we can kind of play it that way because the 4 hour was also bullish. The 4-hour is still bullish. The hourly still bullish. If we come into, the daily chart, well, it's still bullish as well. It's up at resistance, up at that area, but still definitely more on the bullish side of things. And one could argue even a cup kind of forming here. Maybe it'll hit that resistance, pull back and create a little handle, and then an upside breakout. But Euro-Aussie has been one of our preferred ideas. Now, let's look at the other Aussie pairs. If we think about it, okay, we've got Aussie Yen. Aussie Yen is consolidating here, certainly basing. Not really done much of anything. I mean, this is a lot. That's about 8 or 10 days of nothing, where it's just consolidating. Now, if we come into a little bit shorter time periods, you'll probably see we would need to back this out a little bit further, but you can see that consolidation. Ultimately, could be a breakdown area if we reverse that way. Could be a upside breakout area if we reverse up that way. But right now, it's somewhat in no man's land where we're still within that channel and it just doesn't have any momentum, really. If we go to, Kiwi and other pairs, we're probably not focused on tonight because obviously our focus is just going to be on those Australian dollar pairings because that's what's going to be moving. Kiwi can move a bit in sympathy to that potentially. But here's Aussie versus the CAD. It's in a downtrend on the daily chart. So again, another idea for basically short Aussie, which is, what we were looking at there in Euro-Aussie. Again, kind of just consolidating, just choppy back and forth. This one's a little bit interesting to me because you did touch the upper band and you still stayed below the 50. See how we have not closed above the 50. So it actually has our bearish Bollinger Band set up on the hourly chart, which is a bearish indication, which is basically an indication that we should trade lower. So I'm not against this. Probably where I'm kind of leaning, in fact, is more towards the Aussie CAD short side. I don't have a strong opinion on the fundamentals of the Aussie so much, but if I come into the 4-hour, I would call this a neutral chart. You're making lower highs and higher lows. It's a symmetrical triangle. It's just a wedge pattern that gets tighter and tighter until it bursts. And that burst very well might be to the downside. And the 1-hour chart, well, this chart pattern is broken if on the announcement in 4 minutes we spike up here and settle up above this level. So if we really get an energetic break higher, we just don't take the trade. If we get choppiness or even a flash down and then it kind of chops around or whatnot, we very well might short this. So what I tend to do would be to get prepared for it by setting up a sell short order, and I would just snap that somewhere around these current levels to say I'd be willing to short at this price or anything higher. It's currently set at 91.69. We could probably even give it a couple more pips, 91.67. Just have it ready to transmit. You can put that position size at whatever you want, however big, say you're trading 5 lots, 2 lots, half a lot, whatever. You can also attach to it a stop that goes above and a target that goes below. Something like this, and then you can just drag those wherever you want. And I would probably, big picture target, you'd probably be down here. You might take profits even before that. And stop loss, I don't think we need it that far away. We could realistically just go up above these highs. And now you're looking at risk to reward wise, you're not risking all that much from a risk reward perspective. If this trade does not work out, based on where we enter and where our stop loss is. We can kind of tighten up the scales here a little bit. And you can see that, I mean, it's pretty tight amount of risk. We could be shorting this thing at 91.68 and have a stop at 91.78 and be risking 10 pips or so. Now, oh, I've got those on backwards here. We need our buy limit down here and our buy stop. But either way, there we go. I knew something didn't look right, but there you go, where you're risking about 10 pips or so. The difference between where you're shorting and where your buy stop is your risk. So somewhere in that neighborhood. I would probably just want a little bit of clearance. You know, I'd be willing to risk a few pips there and get stopped out up above those highs. So we're kind of waiting in anticipation for the announcement here and see what type of energy it has. You'll get used to trading these type of events. One of the things that I always teach is watch for the pop. Watch for that energetic burst, which will tell you if we have energy or not, right? We got to see some energy basically in this trade. So it's coming out right now, and just keep watching that price action. Let me zoom in. Keep watching that price action and just watch for the pop. Just watch for it to move, and you can be ready to transmit. Now again, I'm going to be personally trading on a different screen, so you won't see this order transmit. I don't actually transmit from this screen, but anyway, you get the idea. I was giving you an example here. So see how it's, I mean, that wasn't a huge pop, but see how it's moving? See how the initial burst was to the downside? There's not a ton of energy, but basically if you were to short it here, you'd be short right here at 91.68. And well, there you go. That thing kind of took off there in the last little bit. See that energetic burst? So if you transmitted that, and that's why it's good to have your order prepared and live. Basically, you can hit that transmit button and potentially get a fill. If you are a little bit slow on that, here's, you know, you missed part of the burst, but there's plenty of energy there. You could make a little adjustment to play this chop. You could basically drag down your entry a little bit. Now, I wouldn't go much, but if you go down a few pips and you kind of keep your stop loss up here, I'm not against risking 20 pips or something in the trade, right? That would be about 19 pips. So if you miss the first one, and I was trading on my other screen there, but if you miss that first one, you're basically getting that second chance right here, right now. Now, if you don't get filled on this one, on this chop back up, and it just takes off, well, then the ship has sailed. There will often be that burst of energy, then that second chance, and this is the second chance right here. So you may even have to pull it down a couple of pips or something. You know, you don't want to chase it, but basically this is your second chance, and it may run away from us right here if you're not, again, if you're not in it. If this thing spikes back down to these lows, you don't want to keep trying. You don't want to keep chasing after it or moving your order down, but you don't even want to leave your order up here anymore, because if it keeps coming back up, it's just going to go up and hit your stop. A good trade might come back once, maybe twice, but I don't even get in on the second kind of chop or anything. This is the breakdown, and then it'll chop around, and if you don't get in on that one chop back, you know, the ship has sailed. So that's kind of where we're at, kind of where we're progressing right now is, well, the ship has kind of sailed in that if you're not in it on early, when we kind of talked about it right there, and it would have had to happen quick for you. That's why having those orders ready, or on the second burst, then you probably missed the trade altogether. So anyway, from the standpoint of trading, these news events, I mean, they're quick. If there's energy, it bursts, right? And just as quick as it spiked down, this thing could have spiked up and hit a stop loss. I've had trades before where the I've gotten into the trade and stopped out in a matter of seconds, where you'll have, it'll kind of show an energy spike down and you'll be like, okay, this is it. Trigger my order, and next thing you know, it spikes right back up and hits your stop, and you're out of the trade within a couple of minutes. That has happened to me before. It's probably anyone that's traded long enough. It's happened to everyone, right? But most of the time, you can kind of get a sense for trading these events. And we had a good setup, one of our strategic setups. We had an idea and a concept that really plays out. We've got a decent reward amount, a low amount of risk. We had it even tighter, even if you kind of pulled this order down. Now you're only risking about 20 pips. We started off with 10-ish pips of risk. So it was not a high risk scenario, but it's a bigger reward scenario. And right now it's certainly acting the right way. So as you can see, Aussie is weakening on the news. Now let's go from here and let's just go look at what the actual news is. It's interesting, but we don't really care so much about what the news is in most situations, because you pretty much have that laid out. Like, this is not a shock. They came in at 3.6. Well, I said at the very start of class, it's going to come in at 3.6. This one was not debatable. This one was. This one had a lot of uncertainty around whether they would do 25 or 50. They did 25. The market expected 50. There are certain events where there is a level of uncertainty. This was not one of them. We knew a rate hike was coming. We know that the market's pricing in another one beyond this very shortly. So the fact that they did the first, actually the next one has more debate and more question marks surrounding it, not this one. And so this made it less about the news and more about the guidance. Where do we think we're going from here? And that's why, the short Aussie trade makes sense to me because, well, a few different reasons. Number one, it's been a laggard. Number two, the RBA just saw a weaker, quite a bit weaker, almost 1%, 0.7% weaker than anticipated in the inflation number. That does not argue for aggressive rate hiking, right? That has to put the RBA a little bit on, well, if inflation comes down dramatically on its own, and from these rate hikes that are happening, we don't want to kill the economy. We don't want to choke off economic growth with too fast and too much. Now, we want to get inflation under control. That's a bigger risk, but in a perfect world, they'd have that soft landing where they stop rate hikes, the economy does fine, and inflation comes down and now everybody's happy. They would much prefer that to continuing to hike rates, kill the economy, people lose jobs. If they can have the perfect scenario, well, a soft landing is better, right? So that, again, it lends itself to a short Aussie trade. I mean, that was certainly the focus. We talked about if you wanted to buy Euro Aussie, that would have been fine. We could have spent more time and attention on that. You can see the same thing, the burst and the bullish move, and probably, more to come. Probably a bit more upside before you take profits in that trade. So from the standpoint of opportunity, I think the short Aussie trade was certainly our focus, and in this case, it happened to work out, and we're thinking about the markets correctly. We're trading in the right area of the market. Let's look at one other. If we go to Aussie USD, now we were looking at Aussie versus the CAD, but what do you notice about Aussie USD? Same exact thing. Everyone see, this is a strategy that I look for you hit the upper Bollinger Band. You never closed above the 50. That's the bearish setup, and sure enough, the breakdown that's materializing. So fundamentals, technicals, they all kind of lend themselves to a short Aussie trade. So our focus was on Aussie CAD, but that one will trade very similar to Aussie US dollar and should build, a bit more. You'd probably be up, 15-ish pips or whatever in this trade thus far at where it's at. It should continue to grow a bit further. And we were kind of looking in the neighborhood of down there around 911. And if you look at that, maybe we back this chart out again just to kind of show where that target comes from. You can see it down here at the lows. So you got this bearish reversal. This is how assets often trade. You should come and break this support, which is what it's struggling and battling with here. Now, this is kind of first level. If you wanted to take a quick profit and make a quick buck, this is a place it could kind of hold. I think it'll go through it and get to that next place, but that's probably a couple hours away. It probably won't happen in an instant. Probably happens overnight or early tomorrow morning, but that's what I would anticipate. Yeah, I mean, this particular trade, so I would basically keep it on until either A, it hits the stop, or B, it hits my target. And I'm personally not super aggressive about tightening up stops. Some people, I feel like most people suffocate their trade and they just keep, jamming the stop loss down here. And then the normal, what we call market noise, just hits your stop loss. And, a stop loss always gets you out when the price comes against you. So you're always giving up something. So I much prefer, it's not to say I wouldn't ever tighten the stop, but at most I'd probably move it to break even and just say, okay, I either break even or I make a lot. I'm not going to sit there and tighten up my stop super aggressively and just keep pumping it in here, because then you're just begging for it to get hit and not really giving the trade any room. So for me, if you want to move your stop to break even, perfect, no problem there. Or leave it with your 10, 15, 20 pips of risk, something like that. But probably be in one of those two areas personally. Notice, I mean, this thing is working. We're now breaking that level of support, which brings this target into play. And quite frankly, this target might be hit sooner rather than later. So we may get there within the next hour, 2 hours, 3 hours if this momentum keeps up. But this was a nice energy burst, and we'll see if it can continue to trade down there. My guess is that this candle won't do it. That's not a huge surprise. It's got 18 minutes left to form this hourly candle, and then another one forms, and there will probably be some price overlap on that candle and so on. So you're probably, few hours away from getting down to that target. 4 or 5 hours if it's really progressing well. Probably hit that target overnight. So I hope that's helpful. Pound Aussie. Pound Aussie, 1.7957. Can it hit that target? 1.7957. Where are we at? Oh yeah, that's not very far from where we're at. Certainly can hit right up in there, and again could hit that within the next hour, 2 hours, 3 hours, something like that. Up here at around 180 is where we failed previously, so you may even get a little bit further than that. This, may come back up towards that level and then back and fill. But ultimately, Yeah, I think that's very reachable. So, good class, a lot of fun. Everyone have a great night, and we will be back. Well, I'll personally be back on Wednesday for our Maverick midweek. Come and join us, and we'll see you then. Goodbye, everyone.